Hey, what's up guys, welcome back to another video on Trade Now. And for this video we are back with another 1 minute scalping strategy, and for this video we'll be using the triple EMA strategy that is paired together with the stochastic RSI. So let's get right into the video and I shall not waste any time. First up, you'll be using 4 indicators and 3 of it will be the EMA. So you just go to indicators and metric strategies, search up EMA, you'll see this moving average exponential. Click on it 3 times, it'll have 3 EMAs pop up here. And your next indicator will be your stochastic RSI, and this will be the indicators that you'll be using. So for the stochastic RSI, there's nothing you need to change. For this, just leave it as it is. And for the EMAs, you have to change the color and as well as the length. So firstly, you want to change the length of the first EMA to 8, change it to orange in color and click OK. For the second one, you want to change it to 20, change it to yellow in color, OK. And for the last one, you want to change it to 50 in length and then you change it to green color. So for the color wise, doesn't really matter. Most importantly is for you to be able to differentiate which is the EMAs. So this strategy is quite simple. Basically, we're just trying to scalp the trends, and since we are trading on the 1 minute time frame, the trend is very important and you must be able to get in and out of trades quickly. So obviously for this strategy, we'll be using together with the stochastic RSI. So let's get into how this strategy works. So first up, you want the EMAs to be able to cross over each other and head in one direction. So what do I mean by that? So let's look right here. We have the crossover where the orange EMA is above the yellow EMA and the yellow EMA is above the green EMA. And when that happens, it means that you want to enter a long position because the trend is going up. And the EMA basically follows the trend and helps you to tell where the trend is going. So when the orange EMA is below the yellow EMA and it's below the green EMA, it just suggests that we're in a downtrend and we want to take short positions. So in order for you to go long, orange above the yellow, yellow above the green, that is your first rule. Second rule is you want a confirmation, and that confirmation is a crossover of the blue stochastic RSI line above the orange line, and that crossover has to happen below the 20 value. So we have a perfect example right here. So let's look right here on the RSI. We can see that we have the crossover of the blue line above the orange line, and in this case the crossover happens below the 20 value area. But however, the EMAs are still not all cross over each other, so we will not take that position. So let me show you guys a long position example. Right here we have the crossover, but it's above the 20 value area, so we won't take that. But here we have a perfect example. We see that the EMAs are all above each other, orange above yellow, yellow above green, so valid position. We have the crossover of the blue line above the orange line on this candle right here. So where will you place your stop loss? Your stop loss you can place either below your recent swing low, which is right here, or you can place it at the 50 EMA and you take a 1.5:1. So having a 1.5:1 risk to reward ratio means that even with a 50% win rate, it means that you'll still be profitable. So let's look at another entry right here. So we have the crossover right here where the orange EMA is slightly below the yellow EMA, so we will not take that position. We must wait for the orange EMA to be above the yellow EMA for confirmation. So even though there is a crossover right here and right here, you can see that since the EMAs are not above all each other, we will not take that position. So there's no other valid positions here. Then we find another example. So right here we have another perfect long example. Can see here that we have the orange above the yellow, yellow above the green, and we have a crossover of the blue line above the orange line, and the crossover happens at the 20 value area. We'll take a long position there. Stop loss will be at the recent swing low. If you find that it's too close to the 50 EMA, you can put it at the recent swing low and you take a 1.5:1. So very nice, very valid position right there, and it's a very simple strategy. Let me show you guys one more last one. You can see here orange above the yellow, yellow above the green. We have the crossover of the blue above the orange, and that's a valid position. So there we have it. You can put our stop loss at the 50 EMA and take 1.5:1. So right there, another valid position, and they have 3 wins and show you guys how to go short right now. So basically the short idea is almost the same thing. You just want to wait for the orange EMA to be below the yellow EMA and the yellow EMA to be below the green EMA. So right here we have the crossovers, so we are looking for a short position right now. So we want to wait for the blue line to cross below the orange line, and the crossover must happen above the 80 value area. So we have the perfect setup right here. See that all EMAs are going in the downward direction and they're all below each other. We have the blue line crossing below the orange line, and the crossover happens above the 80 value area. So this is a valid confirmation on this candle right here. Stop loss will be at the EMA, and you take a 1.5:1. Valid position. Here we have a crossover of the blue line below the orange line, but the crossover happens when the orange EMA is above the yellow EMA, so it's not a valid position. Same thing here. We have not a valid position because the orange EMA is not below the yellow EMA, even though there's a crossover here, so we will not take that position to play safe. So let's look for another short position. Let's go back in time, and here you can see that there's a big downtrend, so I'm not gonna cherry pick those positions. You're gonna see right here we have a valid position. You see that the EMAs are all heading in the downward direction. Orange below the yellow, yellow below the green, and we have the crossover. Perfect entry right there on this candle. Stop loss is there, and a 1.5:1. So it's a perfect position right there, and it's another win. So as you can see that since we're trading on the 1 minute time frame, the entries must be very tight and the stop loss must be very tight as well, which just means that you might incur a lot of fees, and even though this strategy is very good, the fees might eat up a lot of your profits. So that is where I'm going to introduce you guys to the exchange that I use to trade. So right now I trade on tradeiq. Right, you can sign up the link in the description box below. So if you sign up with tradeiq, you guys will be able to have fees as low as 0.019%. So if you use the link in the description box below, it's only 0.019%, and as you can see for each trade right here, you're earning about 0.25%. so it's only a small portion of your profits right here. And honestly, with this trading method, since you're going to be having a lot of trades, maybe 10 to 20 trades, it's important to have a exchange with low fees. So check out tradeiq if you want low fees. Maker fees as low as 0.017% if you have VIP too, and so on. So sign up with the link in the description box below. And personally, I also trade using the exchange. As you guys can see, I am in the position right now, and I personally trade on this exchange. So it's not only I'm advertising it without using the exchange, and I personally think it's quite good. So for this strategy, basically it works the best for trendy markets, and there's many things you want to avoid. And right now the things that you want to avoid is those rangy markets. And what do I mean by rangy markets? You can see that in normal trendy markets like this, where you can see it's clearly going up or it's clearly going down right here, that is the markets you want to trade in. But you want to avoid trendy markets like this, rangy markets where they're trapped in this box. It's going up, going down, up, down, up, down. Basically when the EMA is not heading in one direction, you can see that it keeps crossing over and everything. So you want to avoid this type of positions. So anyways, that is it for this video. Hopefully you guys enjoyed. Make sure to hit the like and subscribe button, and you check out my other strategy videos as well. See you guys, and thank you guys for watching.